morning and welcome to the Naples Money Managers News You Can Use. I'm going to be joined today by Dennis Nelson, as you can see, and John Kincaid. We're giving Marcus a little break from being the host every week. A couple things I always want to share at the very beginning. One is a bit of unsolicited advice here. Don't be afraid to ask questions, because 99% of the time, most of the people are thinking about the very same thing and are afraid to ask the question. So in fact, you're doing them a favor. And as far as we're concerned, if we ever say anything that you don't understand, ask us 20 times if you need to until we put it in language that works for you and that you understand. It's crucial to your investment success, is fully understanding why something's being done, right?
Right.
The other thing I wanted to talk about was ballots. Everybody who's absentee balloting or wants to early vote, that's now started. Some people have concerns that maybe their absentee ballots might not be counted. So I, for one, am going to bring my ballot and my husband's ballot in personally to the precinct, so I know that they have it. And it's, some people are worried about the post offices being overrun, and I was telling Dennis that in Vermont, the post office didn't have internet for 4 days. How is that possible, right? They couldn't figure out how to send a package, how to print it out, what it cost, use the credit machine for 4 days. That's unacceptable. But
it is.
Anyway, so I think right now we're going to talk about SPACs. Speaking of a weird name.
Speaking of weird names, here's one we get a lot of questions about, and this is certainly a good topic to ask questions about, because there's a lot of wiggle room in how you approach these SPACs, if you approach them at all. SPAC, S-P-A-C, is a special purpose acquisition company. What it is another acronym, an IPO, initial public offering, where the SPAC is going out asking for funds that will later be reinvested by purchasing a private company. You don't know what that private company is, you don't know, well, frankly, you don't know anything about it. You're basically writing on the credibility of the manager of the SPAC. So, as for instance, Bill Ackman came out with a SPAC IPO, and he got $4 billion, which to go out and buy a company. Now he's got 2 years to buy that company. But once he does, they shape the company up, get it SEC compliant, and then reverse merger that company by putting it back onto the stock market. So it kind of
spins out of the special, what is it?
Acquisition.
Special purpose acquisition spins out of there, and then you can either buy it. You could have participated by putting money into the SPAC, or you could participate by waiting for it to spin out of it and buy it then.
Yep, you could, or invest in both, as far as that goes. There was a recent one, a SPAC called Social Capital Hedosophia. Don't ask me what that means. I Googled it. Google doesn't know what that means, but that's the name of the SPAC. Now they went out and purchased Virgin Galactica. That's the people that send you up to space
I'm not going.
as a tourist, if you're so inclined. I'm not one of those. But
I don't even like to go underwater.
So now you can either still invest with Social Capital Hedosophia, whatever, or you can invest in the Virgin Galactic. They're both on the stock market independently.
So they both spun out of the SPAC.
Spun out of this. Yep. The Hedosophia is the SPAC.
That's probably his daughter's name.
It's got to be something like that. Yeah. Apparently they're going for really weird names on these SPACs. Bill Ackman's is Pershing Square Tontine.
Okay.
Whatever that is.
That's just so we can never remember it and check on it.
That must be it. But these are interesting animals. It seems like they're really going toward smaller, very speculative type situations, like new drugs, like new technology. What seems to be hot right now is online gambling. trying to form companies and SPAC them. So
But there's some risks though, right?
there are tremendous risks. If you invest in a stock like Apple, you kind of know what you're investing in. Here, you've got no idea. This is
So there's
this is a
investment
blank
risk,
check.
there's management risk, there's fees and that
Yep.
kind of, there's always a built-in a lot of fees in those structures. So you have all of those
You
risks
got all of that.
as
Good,
well.
The good news is these are all watched very closely by the SEC, and there's lots of rules that they have to follow.
Yeah, well, I thought Shark Tank should have a SPAC of their own,
I think
because
so.
that's kind of what they do. I'd put some money in that, that'd be fun. Anyway, there's an economic number coming out for the week. We wanted to talk about that every time, a new number.
Yep, Thursday, we have new claims, new unemployment claims to be announced. We hope to see those lower than last week, and I suspect they will be as more and more states open up. We're here in stage 3, I guess, in Florida,
I don't know.
which is basically all the way open. And I don't know if you're required to wear masks now or not, but I still wear mine.
That's really good. So just
Indeed.
one question on that number is, I would like to see a number that talked about how many jobs were available, because I was saying to Dennis, I see help wanted signs everywhere, and that may be a result of moms or dads staying home with their kids or part-time with their kids because of schooling. I think this has changed our entire
I
environment.
think it really has changed the environment and how all this is approached, how we look at it, how we view the economy.
Didn't you just tell me your grandkids were only going to school 2 days a week?
Yep, grandkids down from Pennsylvania, they're going to school 2 days a week. Now, how disruptive is that? They're putting you right in the middle,
Yeah.
destroying your ability to have a job virtually, and yet they're still going to school. I don't know.
Yeah, it
Story
doesn't make,
deal.
it's difficult for everybody out
It
there.
is.
All right, Dennis, we're gonna say goodbye and
Thank
welcome
you,
John.
welcome John on.
Come on, John. John's here with his massive whiteboard. We are talking about getting a smaller one, but maybe you like this one okay, so you can see it. But we'll welcome your comments, of course.
Sure this is,
John, what do you have to say?
So, I was telling the crew here that we flew up to Detroit for a wedding of our daughter. Coming back across the aisle, because you know it's really nice you have a seat in between you with your spouse if you're traveling together. And across the aisle was a gentleman from Troy, Michigan, wealth advisor, spends a lot of time with Ford rollovers, which are now highly watched from the Department of Labor, etc., because he's with a broker dealer, which is kind of the retail area of investment management, as opposed to an SEC registered investment advisory like we are at the Naples Money Managers. The bottom line in the conversation was, if he brings in $1 million for a retirement account, what he does is he simply reaches out and looks at the best managers that he can find and that he likes.
So you should have found us right away.
Right, absolutely.
Right away.
But the point is, he actually goes to the people that he likes and has a relationship with. And that to me is a little bit different, but I understand. I think that was some of my experience when I was at a broker dealer at a large brokerage firm. The point is, he takes those assets and divvies them out or allocates them to some model and gives them to portfolio managers. The contrast I want you to see is how we approach that.
Okay.
We have one main core portfolio which provides income and growth over time with half the volatility of the market. Now, every time I mention that to somebody outside the office, prospective clients, they always say to me, I want some of that. Every time. In the gym, at a restaurant, wherever it is, I want some of that.
And they should.
Literally say that. The challenge is when you come in and start to see our mechanics, they can be a little overwhelming and complex. However, one of the templates that we use is the S&P 500 sectors. There are 11, and they're basically groups of companies like you can see here. You have consumer staples. You know what we need every day to live, so you're going to find that under consumer staples. Healthcare, obviously, you use that. These are some of the ones that we've carried for decades, literally decades. Materials, industrials, financials, and energy, along with utilities and real estate. Information technology is a very big one and a crucial one now. Communication services is one of the big, another tech sector. So we, every morning or every Thursday, we have our investment committee meeting with all of us. And we sit down 8 a.m. in the morning and we say, how is the portfolio working? And what can we do to trim it up compared to these these 11 sectors? Now, each of these sectors has X% invested there. So we look at that and we want to make sure that we're covered.
Right.
That gives us diversification, though diversification isn't a strategy. We use this to start, along with some stocks. We have software to filter the stocks. And then we add on top of that our governor that makes those stocks react in a certain way. And the most important thing is downside protection on people's portfolios.
And extra income, Ken. I always like extra income. And so what we do is we kind of do top down, and as he said, we funnel down, we look at all the stocks in each sector they may have, and then choose the ones that fit our portfolio the best. I have a nice dividend that we can write a decent call on, and get enough money into the portfolio. And Thursday, he mentioned the Thursday morning meetings. Just let me say quickly, last Thursday the Dow Jones was down 6.22. And the S&P was up 0.19. We're up 1.75. Now, that's come down from where we were the week before, but we're still beating them, partly, as you said, because of that extra income coming in, but I think we're also doing good stock selection within each category. And I also mentioned that Marcus's portfolio, the Smart Generation, still up 65.6% for those young people out there who want to get their foot in the door.
Because you know, if you get 65% return, there's a lot of risk. So.
Yeah, there's a lot of risk, but if you can live long enough, it doesn't really matter. You just have to be able to live long enough. Well, anyway, that's all we have for you today. This is Money Matters. And most of all, most importantly, you matter. And let me say quick, you can do the closed caption at the bottom if you can't hear us, and send it out to your friends or subscribe. We'd appreciate that. Have a great day.